2024 was one of the slowest years for real estate in Kelowna in the last 30 years. Sales were down, barely edging out the mid 1990s or the world financial crisis of 2008. But here's the surprising part. Despite everything that's happened over the last 2 years, prices still haven't crashed. In fact, even though they were down in one category, they were up as much as 5% in another. Is it possible that we've reached the bottom of the real estate market? Or at least in some categories? In this video, we'll dive into what happened with the Kelowna real estate market as we closed out 2024 and take a look ahead and see where it may be trending as we start 2025. A lot has happened in Canada and in Canadian real estate over the last 18 to 24 months, and it's had an impact on a lot of Canadians. But for some reason or another, it has not caused a crash in the Canadian real estate market. And in fact, the market seems to be picking up steam again, especially in Kelowna, based on some of the trends that we're seeing. But before we get into the statistics, I'm Tyrell Boake, a realtor in Kelowna, and on this channel, I help you navigate the real estate market and provide you with useful information so you can make informed decisions that make sense for you. If you'd like to stay up to date with my local market, hit the like and subscribe buttons so you don't miss out on future videos. And whenever you're ready and you'd like to discuss your next move in the Okanagan, hit the first link down in the description to book a call with me at a time that works best for you. If we start with the sales volume in the Okanagan, you can see that sales in 2024 were down about 3% from where they were in 2023. This gap was much wider earlier in the year as we had a really slow start to 2024, but you can see that throughout the fall, sales have actually been stronger than they were to finish 2023, and in fact, sales in December were up 40% over what they were this time last year. Some of this can be attributed to the 5 Bank of Canada rate decreases that we've seen since June and confidence returning into the market. It's this trend that makes me think, first off, that the market's starting to recover as we're seeing more activity than we saw in the last quarter of 2023. Throughout most of the year, inventory was much higher than it's been historically, and we did finish 2024 with inventory up 12.5% from where it was this time last year, but you can see that December inventory was closer to what we had in October of 2023. Inventory always tends to dip as we go into the last quarter of any year, as some people don't like to have their homes on the market in December, but you can look for that number to start to increase as we get into January and February and people prepare for what will probably be a busy spring market. Starting with the benchmark price of a single-family detached home, you can see the price was up 1% over what it was in November, up to $1,023,000. It is a $10,000 change in the benchmark price, but that's only a 1% change from where we were the month before. If we go back out over last year, though, you can see that the benchmark price of a single-family detached home is up over 5% from what it was this time last year. In December 2023, the benchmark was $972,000, and we finished 2024 with a benchmark price of $1,023,000. This is a $50,000 increase from what we saw just 12 months ago. And if we look at the benchmark price graph, you can see that the price is still down 13% from the peak of the market, which was the spring of 2022. But after a steady and sharp decline throughout the middle of 2022, you can see that the price has slowly increased. And in fact, you can see by the yellow line that we reached the bottom of this pricing cycle in December of 2023, and the price has steadily increased throughout 2024. Based on this graph, it looks like we hit the bottom of the market sometime in December 2023, and throughout 2024, despite sales volume being maybe slower than it has been in the past, prices went up 5%. This is telling me that we're probably not going to see a crash in these prices, especially in the single family homes, unless something drastic happens and something unforeseen happens in the world that could bring down all of the markets. I think that throughout 2025, prices are going to remain fairly steady and may go up slightly as we head into this year. If we take this graph back out over the last 5 years, you can see the prices are up significantly from 5 years ago, and even though we had that market spike in 2022, prices have been relatively stable over the last 18 months. Moving on to the townhome market, you can see in December that the benchmark price of a townhome was up 2.8% from November. In December, that price came in at $746,000. Going out over the last year, you can see that there's been some stability in this price, with the price only appreciating about $15,000 over the last year, coming in 2.3% higher than it was in December 2023. Taking a look at the last 3 years of the benchmark price of townhomes, you can see that it started to appreciate over the last quarter, and we are higher than we were at the bottom of that market, which was sometime around December 2023, January 2024. And going out over the last 5 years, you can see that that price is up from 5 years ago, and it's relatively back to the same price that it was sometime in the middle of 2022. Moving on to the condo market, you can see that prices in December were pretty much the same they were in November, only down 0.2%. But if we take that out over the last year, you can see that it's down almost 2% year over year, finishing 2024 with a benchmark price of $475,000. But if we take a look at the last 3 years in the condo market, you can see that over the last 6 months, there has been a steady decline in the price of a condo. I think that this is going to continue, and this trend is showing that prices are going to continue to slide a little bit in condos as our inventory for condos grows and more new inventory in the city comes onto the market. But if you've been in your condo for 5 years, you can see that you have had some price appreciation. Following the line back, you can see that today's prices are about the same as they were in September 2021. The price ratio, which indicates how much the final selling price is versus the list price of a home or a property in Kelowna, for single-family homes came in at 96.5%, which is about the same as the month before. The price ratio in townhomes has gone up from what it was in November, meaning that there's less negotiation room for buyers in that asset class. But in condos, the price ratio and that gap has gotten wider. It's gone down to 96%. Taking a look at the months of inventory, which tells us if we're in a buyer's market, a seller's market, or a balanced market, you can see that in single-family detached homes, we have about 8.8 months of available inventory, which is up slightly from the previous month, but still keeps us in a buyer's market. This is keeping prices from going up too quickly and keeping them mostly balanced. We haven't been in a strong buyer's market long enough to bring those prices down, and if this continues, or as more buyers come into the market in the spring and we move closer to a balanced market, that's another indication that prices are going to stay the same or go up slightly, but definitely not an indication that prices are going to crash. In the townhome market, we have about 8 months of available inventory, which is up slightly from the 7.7 months of the previous month. And in condos, we have 8.6 months of available inventory, which is up from the previous month. With condos, we have to be careful because this is only the inventory that's on the MLS system. It doesn't count the inventory that developers are holding, or what we call as shadow inventory. And I do think that we probably have 2 or 3 months of available inventory from developers that we could add to this, and that would put us strongly into a buyer's market, which I think is also indicated on how prices are coming down over the last 6 months. So just to recap, in single-family detached homes, we have 8.8 months of available inventory, which puts us in a buyer's market. In townhomes, we have 8 months of inventory, which also puts us in a buyer's market. And in condos, we have 8.6 months of available inventory on the MLS system, which is also a buyer's market. As we head into 2025, it does look like the market's starting to pick up steam, as is evidenced by the increase in sales over the last quarter. I do think that this trend is going to continue, as we've seen some stability in interest rates now. The Bank of Canada brought the overnight rate back down, and buyer confidence is returning to the market. But I'd like to know what you think. Let me know down in the comments down below. Is the market going to continue on this trend and start picking up steam, or do you think that there's still a crash sometime in the near future? There have also been some changes to mortgage rules in Canada, making it easier for some buyers to get into the market. And if you'd like to find out more about those rule changes, check out this video right here. Thanks for watching. We'll see you next time.